Welcome back. Still with me in the studio, Jacques du Toit, property analyst at Absa Home Loans. We're talking about your home, what it's worth, and maybe where it's going. And this is where Jacques, I'm going to put it there. There's a crystal ball. It's not quite crystal, it's only glass. But what the heck? Where do you reckon interest rates are going to go next year?
Well, taking into account the broader economic environment, the condition of the consumer, that is one fact or factors that are actually concerning to the Reserve Bank in terms of monetary policy. But if you look at the other side of the coin, inflation is increasing, and we're sitting with the inflation target policy. So the Reserve Bank also has to keep their eye on inflation. So it is eroding consumer spending and purchasing power all the time. Now, which is a problem for the consumer, really.
Where is that? Is that inflation coming from food, or is it a mix of the Eskom price hikes and rates and food and all the rest?
It's a mix of a lot of services and goods, but largely driven at this stage by rising food prices. Mm-hmm. The oil price that we've seen increasing in recent times, although it came back a little bit, it is just around about 110 at this stage, but the rand depreciated. So a combination of the oil price and rand movements caused domestic fuel prices to increase. Mm-hmm. And that had a major impact on transport costs right through the economy. And then also your property running costs also increased quite sharply, as you mentioned, electricity prices. Those are factors that are impacting the consumer price index in the end and the consumer. So the consumer is under pressure, but if you look at the broader economic environment, which is very uncertain at this stage, especially from a global point of view and the possible impact of that on the South African economy, while inflation is rising, what should the Reserve Bank do? Very difficult for them to hike rates under these conditions, or even cut rates, because inflation
is a rock and a hard place.
Absolutely, it is a very difficult situation.
I would not like to be Mrs. Marcus.
No, for sure not.
Yeah.
But up until now, right through 2011, they kept rates unchanged at current levels. The latest rate cut was in November 2010. And I believe that was the right decision, because they must still have some ammunition left when things really turn bad, say from an international perspective, impacting our economy. Some of the countries out there are already at a level in terms of their interest rates that they cannot cut rates much further. So the moment your interest rate is cut to the level of zero, you can't use that instrument anymore. You can't cut rates below zero. So we still have some room for rates to be cut further
do you think
conditions deteriorate.
They will cut them? Because surely they should be looking at this stage at maybe putting the rate up.
Well, if you look at consumer price inflation headline, it is nearing the upper target limit of 6%. But if you exclude the volatile components of food, petrol, electricity and other energy components from that underlying or core inflation is still below 4%. It's sitting at 3.8% currently, which is not that bad. So they are closely looking at that specific inflation measure as well.
So is that what they look at? Do they look at that core inflation?
They look at core inflation, although they will also be looking at headline, because headline inflation is actually what they are targeting in terms of monetary policy. But they must make sure what are the factors that are currently driving headline. And the factors that are currently driving headline inflation are from an external nature. Food prices, you cannot control food prices by increasing interest rates. You cannot control the oil price or the rand exchange rate, or the fuel price or property running costs by increasing interest rates. So they very well know what the factors are.
But those factors impact on you and me.
For sure.
Because we're the ones who have to pay those out on a monthly basis.
Absolutely, they impact us. And that is also why, if you look at credit extension in the economy, especially from the household sector side, it is extremely low. Well in single digits for quite some time now. Even if you look at mortgage advances growth in the household sector, was sitting at 1.2% in September this year. Extremely low. Why is that? Not because of the low interest rates. The low interest rates should actually be a boosting factor, but it is not the case. There are a lot of other factors negatively impacting on the consumer.
Okay, now I'm going to put you on a spot now. And I hope you don't get fired because of this. And Mr. Van Zuna, do not fire him. Okay. He's a very nice man and he's doing a very good job for you at Absa. Are banks not being too snoopier? Should they not be opening their pockets a bit more?
They can do that, but again, they must look at the lending criteria against the background of the economy, household sector finances, which changed quite a lot over time, the property cycle, the National Credit Act, and consumer credit profile. All of those things have changed quite a lot over time, and against that background, banks are defining their lending criteria. Obviously, it will differ from bank to bank, but in broad terms, they are very closely looking at those factors currently when they lend to the customer out there.
Jacques du Toit has just been the person behind the release of the Absa Housing Review for the fourth quarter of 2011. We're talking with him this evening about prospects next year. What sort of time span are you putting on this market? When are we going to start seeing house prices starting to move? Because at this stage, everything seems to be absolutely flat.
Absolutely. It will to a large extent depend on the economic environment and the impact of that on the consumer working through to the property market. But looking forward, we're still looking at house price growth in single digits, say for the next 2 years, 3 years, even 4 years, maybe up to 6 or 7% at some stages. Will also depend on the interest rate cycle. So we are not looking to a booming market in the short to medium term. And if you take into account the effect of inflation and you do that calculation in terms of real price growth, then we are seeing prices dropping further this year, and there will be further price deflation in real terms in 2012. That is our forecast. And only starting to gradually turn around towards the end of next year, early 2013, and maybe after that, some marginal real price growth, which is a very important factor from an investment point of view, because your investor always wants to know if his investment is beating inflation.
Yeah.
And currently, in terms of property, residential property is most probably not the case.
If you were going to get into property, and we touched on it in the first segment of the show, if you were going to get into property, you've already outlined what area you would get into, the sort of 700 to 900,000 rand property segment.
Yes.
From a rental point of view. Is this, once again, as most people say when they come on this show, they talk about whether it's equities or property or whatever, they say it's always look to the long-term one, yeah?
Sure.
Are we still looking long-term in property?
I believe so. At some stage, I should say around about 2004, 5, maybe 2006 as well, there was a very short-term view in terms of property. And we had many investors and speculators entering the market during that those few years. Currently, I believe many of those guys have actually left the market because of the very low price growth. In terms of our forecast and how we see the market moving forward, I do not believe that one should have a short-term view anymore in terms of property. I believe 5 years plus at this stage in terms of property investment. Otherwise, you will have a problem in terms of capital appreciation. In terms of rental property, maybe focus in the meantime on that income stream that you can derive from your investment, while the capital appreciation side of that equation will most probably sort it out over time. Okay. But for that, you'll have to allow, I should say, 5 years plus.
I was having a chat the other day to a guy who is building, he's in the property business, development, and he's building, excuse me, one-bedroom apartments in small towns with universities. And the return on those investments, he says, is massive, because you've got pa wat nou in Viljoenskroon sit en dogter gaan Stellenbosch toe en hy koop nou die plek in Stellenbosch vir sy dogter.
No, for sure. But I think
And then they resells that in 3 years' time.
absolutely. I think that is a total different market, say from the normal market, because there you've got a specific situation where there's a major need and a massive need for housing, say over a 3 or 4 year period in terms of a specific student.
And then you know that's going to go back for resale.
Absolutely. And then the next generation of students will then need accommodation, and then you can resell and you will get a good price. That is total, and I think that will be the case to a large extent in future in those towns. Potchefstroom is another case as well, Stellenbosch, maybe also Grahamstown, and not the university in Butterworth, as you used to say in the past. But really, I think that is definitely a very good investment in those towns specifically.
If you were going into the property market right now, as a private investor, and having done the analysis, what would you be doing?
Well, I would focus on your sort of 2-bedroom townhouse type of flat, because that is where the big demand for property is. In a good area where you are very near amenities like shopping centers, maybe work areas, and also universities. So in your major metropolitan areas, those type of properties will definitely be a good buy at this stage.
But as we've always said on this show as well, your best tax-free investment is putting money into your current home loan and paying that off.
No, for sure. And I also believe that you should continue to gear those type of investments. And if you have a good financial position and your credit record is in place, I cannot see why you can't get through the application process, taking into account also the possibility of paying a deposit on that transaction.
You see, that's why I wish he was my bank manager. Because by the sound of it, I could come in and sit down and say, Jacques, I need to buy this house. And you'd go, okay, Jeremy.
No, for sure. Why not?
Yeah,
we want to do business.
Right, we want to do business. That's what it's all about. Jacques du Toit, thank you very much for joining us this evening. Jacques du Toit, property analyst at Absa.